In today's video, I'm going to talk about market timing within any certain trading day. Hello stock traders, I hope all of you have had a fantastic day. Now, quick disclaimer. These are theories. These are observations that I have made about the stock market that you may or may not agree with. This is not scientific stock market fact, but theory. I am very curious your opinion about this particular topic. Please reach out in the comments section down below. I want to hear from you. If you think I'm crazy, that's okay. These are just my observations. But before we get started, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you haven't done so before, please consider subscribing and turn on those bell notifications so you get notified when one of these videos comes out. Now, I am not a financial advisor. Of course, you need to do your own due diligence when buying or selling any position in the stock market. Okay, so let's talk about those intraday market moves. Here are my theories, and all of these time frames are going to be based upon the central time zone. So please adjust accordingly for your time zone and where you are at. Okay, let's start with pre-market, 3 a.m. all the way to 5:59. This is typically where the Webull investor is in control because they are just about the only brokerage that can trade at this time of day. At this time of day, I have ridiculous prices set on those stocks I'm looking to exit for the day, in hopes that I'll get someone who has FOMO so that they will overpay. If you have ever overpaid at this time of day, it is most likely because you bought a stock from a stock investor like me. It is important to understand this time of day on the market and buy and sell based upon support and resistance levels. In my opinion, the best time to buy in these time frames is right before you move to the next time frame. 5:50 a.m. is a good time to buy because most of those buyers have worn out or spent the amount of money that they had planned to spend. Sometimes you can catch a really good deal at this time of day. Next, we have 6 a.m. Central, and this is the time frame when a lot of brokers come online like Schwab, TD Ameritrade, and others. At this time of day, you will get a nice volume spike, and this is where you have more liquidity in the pre-market. Next, we have 7 a.m. Central Time. This is when institutions come online. You will notice a huge spike in volume at this time because that is where most of the market money is. So you can see that here in this example, all of a sudden you got this big bar right here. How the market reacts right after 7 a.m. in pre-market gives me kind of an idea of how the market's going to move for that day. At least what the preliminary sentiment is of that market day. All right, the next time of day we have is 7:45 a.m. to 7:59 a.m. Central Time. So this is 46 to 31 minutes before market open. This is where I am checking the bond yields for the day. The market really moves based on bond yields. If you see yields are up, then the market's probably going down. But if you see rates down or pull back heavily, then most likely the market is going upwards for that day. The most important bond yield to look at is the 10-year Treasury yield. And that takes us all the way to 8 a.m. So that is 30 minutes before market open. And the famous Robin Hooders come online. Definition of Robin Hooders: inexperienced FOMO at its best. This is of course a generality, but with Robin Hood investors, you have a lot of beginner investors who are not experienced, who tend to react to the market with more FOMO than other brokerages. The other tough thing about being a Robinhood investor is you have to wait all the way until 8 a.m. or 30 minutes before market open. This is a lot of time for FOMO to set in. Next, we have 8:25 a.m. Central to 8:30 Central. This is key because brokers like Schwab and TD Ameritrade and E-Trade a lot of times cancel all of their pre-market orders. So there is really low volume, typically the last 5 minutes before market open. There usually is a market dip that coincides with this low volume. And if you have a broker like Webull, a lot of times you can pick up stuff at a really great deal at this particular time. All right, now we're to market open from 8:30 a.m. to 9:30 a.m. Do you ever wonder why usually the market moves up heavily during this time frame? The reason is, in my opinion, is this is when international brokers come online. So many international investors invest in the U.S. stock market, and they cannot purchase stock in pre-market, and so they have to wait until market open before that FOMO kicks in. And so that FOMO can move the market in either direction. So if the market is down or some negative news is dropped, this can deflate the market or sell out the market rather quickly. But most of the time, as long as the market is got just kind of okay news or no really bad news, then the market tends to move up during this time frame. There are a lot of days where 9:30 a.m. is the high of day. This is after the market has been open for 1 hour. All right, so now we are at 10 a.m. Central Time, and here's where it gets really interesting. As you can see here on the chart above, this is where the big boys like Goldman Sachs, BlackRock, Fidelity, and JP Morgan Chase are trying very hard to stop you out of your position. They are trying to take advantage of weak hands, and you can really see it on the chart here. During this time frame, this happens a lot, over and over again. 10 a.m. Central, 11 a.m. Eastern Time is when this typically starts, and you can see it lasts all the way typically until 12 o'clock or shortly thereafter. And if you look at this chart, you can really see this in action. So this is my theory. Big banks can't talk to one another and can't collude. Investment bankers can't talk about this. This is something that seems to happen each and every market day. It's almost like a secret code that those big boys are sitting back saying, we're gonna get them this time. What you need to understand as an investor is that market manipulation happens each and every day. You can see it in stock trading patterns if you really pay attention to it. So during this time frame, a lot of the lackeys at those firms, they get paid a bonus for how many people they can stop out during this time frame. They are looking to bring the market down so that then all the buyers can come in and purchase the market at too good a deal. They're looking to get you out of their positions to pick up stocks at a great price. That is why I'm a fan of mental stop losses rather than real ones. The saying taking out all of the stops, well, this time frame is what the market is referring to. And you can see it here right at 12 o'clock. What happens as you get going here? Oh, the buying starts. Here we go. All right, well, now it's okay to enter. Let's get those great deals everyone's loading up. All right, that brings us to 11:31 a.m. all the way to 1:29 p.m. Not a lot is happening during this time frame. All the people at Goldman Sachs need time to go eat lunch. So the market just really tends to just chop around during this time frame. So if you know that these time frames tend to happen through the market day, what you can do is you can use them towards your advantage. For example, between 1 o'clock Central Time and 1:30 Central Time is a great time to pick up stocks at a really good deal, in my opinion. I'll save some cash for that particular time of day to load up stocks at that time of day. And of course you want to catch it before that magical power hour, because it typically lasts between an hour to an hour and a half. This is when everyone's aligned and FOMO is all together with the market, in that the institutional investors want to get in, especially if the market is surging upwards. They want to get in during this time frame. Also, retail investors are of course looking to get in before the end of market too, so this is the time of day that typically the market moves up, as long as there's not a negative catalyst or the president speaking or something crazy like that. Now, I'm not a fan of aftermarket, and that takes us all the way to aftermarket. Very rarely will I pick up a stock to buy in aftermarket. Sometimes I will sell a runner, especially if I have a stock that is really moving, had some great news, but has gotten way overbought. Now, all these ideas are just theories, but I think you can agree that you see the market move this way. And if you are a new investor or even a seasoned investor who's looking for great stock trading strategies, you should check out our Patreon group. We have a link in the description down below, and I think that you'd be glad that you did. For the small amount that it costs, you'll easily pay for it with just one great trade. Hopefully this video helped you to understand a little bit of theory behind how I think the market moves, and we'll just see if you agree with me. Hopefully this video helps you to understand why the market moves the way that it does. I wish you all the best on the stock market each and every day, and Raythoven out.